If you ever looked at your business bank account and thought, where did all the cash go? You're not that crazy. A lot of small business owners confuse revenue with success and profit with cash flow. But here's the truth. Healthy cash flow is the lifeblood of your business, and it has everything to do with your tax strategy. So in this video, I'm breaking down exactly what good cash flow looks like in a small business and how your tax plan either supports it or sabotages it. Hi, I'm Joshua Hunt. I'm a strategic tax and accounting professional and enrolled agent, and I help small business owners optimize their finances through strategic tax and accounting solutions. So let's jump in. Most people think cash flow just means money coming in and going out. And that's part of it, but strategic cash flows goes deeper. See, good cash flow means you're paying your team, your taxes, and yourself consistently. You know what's coming in and you know what's going out, but most importantly, you know why. And also, you can weather a slow season without panic or even getting into debt. And lastly, you're building reserves, cash reserves, and not just treading water. So, what does all of that look like? So, it's basically where you're paying yourself through a salary or owner's draw on a regular basis. You got money set aside for quarterly taxes, and you're not guessing during tax season. And you have at least 1 to 3 months of operating expenses already currently in the bank, and you're funding your growth from profit and not loans. It's not just about staying afloat, it's about staying intentional. And you may have to build up to this. But here's where most people miss the mark because your tax strategy directly affects your cash flow. And let me break this down how. Number one, missed time tax payments. So if you're not planning ahead, tax season blindsides you by not knowing how much your biggest expense is going to be. And it's draining your cash and throws off your whole system because you spent your money already. Or you simply just didn't have it to begin with. And number two, maximizing your entity structure. So as you continue to grow and grow, your structure you choose, whether LLC or S corporation or even C corporation. Wait, if you're a small business owner, please do not get a C corporation. Just don't. Your structure affects your taxes, and that affects your cash flow. An S corporation might save you thousands in self-employment taxes compared to an LLC, and that's money staying in your pocket instead of the IRS. So number three, expense timing. What is expense timing? So this is strategically timing when you make a major purchase. So that can smoothen your tax burden and protect your cash flow. So let's say your income is higher this year. It may be good to invest in a tax saving asset that will lower your taxable income and your overall taxes. It may be some equipment or property that will benefit your business and lower your taxes at the same time through accelerating the depreciation. Number four, missed deductions. There have been too many occasions where business owners didn't keep track of a purchase just because they thought it couldn't be written off, or simply just not keeping up with their books. Remember, messy books will make you overpay in taxes always. And number five, tax savings equal more usable cash. So when your tax plan works together with your business plan, you have more money to reinvest in your team, your business, and your future. So here are some cash flow red flags. So when you can identify with these things, it's time for a change. You make good money, but there's never enough to go around in your business. Red flag number one. You're always surprised by your tax bill. Red flag number two. Or if you can't pay yourself consistently, red flag number three. Or if you tapped into your personal savings or credit cards just to make things like payroll or regular expenses, that's red flag number four. And if you avoid looking at your numbers because you just really don't understand them, that's red flag number five. And let me tell you this isn't just a bookkeeping problem. It's an overall tax and bookkeeping strategy problem. Now, let me show you what healthy cash flow looks like. So this is when your tax plan is working with you. So you're able to separate money for taxes, operations, profit, and yourself. Also, you're allocating money either weekly or monthly into all of those different buckets. You may be meeting with your tax professional throughout the year, or at least at the end of the year and not just April. Also, your tax plan is built into your budget and not just a reaction. And then you also know your break even point, when you will begin to owe taxes, and just your overall goals. In the big picture, you're in control. You're not reacting to your numbers nor taxes. You're actually using them to make smart decisions. So, how do you start building cash flow that actually works? First thing, get clear on your numbers. Know what's coming in, know what's going out, and know what's owed. Use all of your financial reports, not just your profit loss statement. Begin using your balance sheet and your cash flow statement. And then work with a tax advisor and project your tax liability each quarter. You need someone who's going to help you plan taxes and not just file them. And after that, try forecasting your cash flow. Even a simple spreadsheet will help you stay one step ahead by seeing what's ahead. And then, one of the most important ones, set up a tax savings account and start building the habit. Even if you're not sure how much to save yet, just begin to start putting more and more money aside for taxes. And lastly, review your business structure and what big deductions to take for the year, because what worked last year may not be working now. So if this hit home, if you're ready to finally get control of your cash flow and taxes, I can help. Download my free guide of 5 surprising ways your cash flow problems are actually tax problems. And if you're ready for a custom plan, click the link in the description below and book a consultation. Because you didn't build this business to feel broke. You built it for freedom. So let's make sure your numbers reflect that. I'm Joshua Hunt. Thanks for watching, and I'll see you in the next video.